Happy Friday, and welcome back to Live Lunch and Learn. I am your host, Lambros Demos. And yesterday, the federal government announced their budget for 2022. And as expected, it was heavy. It went heavy on housing, specifically three main areas: trying to make housing more affordable, helping Canadians buy their first home, and protecting the rights of buyers and renters. Also this week, the stats for March came out, and it looks like the market may be changing. With me today to discuss the budget, the stats, and anything else you wish to talk about, as your questions are always welcome, is Mortgage Hall of Famer and longtime TV panelist on CB24's Hot Property. He now is an Instagram sensation. Welcome back to the program, Vince Gaetano.
Lambros, I always love that intro. You must be my best fan.
Well, I do follow you on Instagram. So.
Thanks so much for that. Wow, what a day!
My pleasure.
The federal budget, which had a major focus on housing, was announced yesterday. Highly anticipated, and I think it was flat. Yeah. It was really flat. I sat there and I just shook my head thinking, how does a group of people who run our country not know what the issues are? And I think they're trying, but they're not talking to the right people. Housing affordability is impacting people that are trying desperately to get in, and we need to ease up on the demand from certain sectors. We need to help those to get into it. And none of these programs, in my opinion, did that. We had a tremendous opportunity, but I think apart from the rest of the budget, which addressed some other issues, we need skilled trades. We need people to help build homes. And you could promise and you could throw money at stuff, but stuff just doesn't appear magically. Right? Stuff has to be built. You need skilled trades. You need workers. You need laborers. You need people to put the nails in the wood. You need people to put the drywall in. You need people to pour concrete, electricians, plumbers, carpenters. And, it's missing. It's missing. And it just boggles my mind how they think this is going to go away. And there should be more alignment with other forms of government, because the feds don't control permits. They don't control zoning. And everything sounded great adjectives. But NIMBYs still control council.
Okay.
And a lot of affordable housing in this budget all over the place. You have the new housing Accelerator fund, you have the rapid housing initiatives, the housing strategy, national housing strategy, all geared to affordable housing, and lots of money being thrown at it. But how are you going to get this stuff approved?
No, those are all excellent points. I'd love to touch on them a little bit more detail, each one. So you mentioned a few of them there. I'm actually going to bring it up on screen. So here's a few of the ones you talked about. So obviously the biggest one was launching a new housing accelerator fund. I think that's the one with $4 billion added. Now, I guess Canada already builds about 200,000 homes, so they want to build an additional 100,000, if I'm not mistaken. Is that
in and around there? Like, that's their goal. That's their target number. Okay. So this accelerator fund is this money is being given to CMHC.
Correct.
I think it's over a 5-year period, so it's about $800 million a year. And it's to help support cities and communities to speed up the delivery process for permits, for approvals. They need to build affordable housing in these communities using high density.
So with this,
I get it through the approval process. Like these neighborhood associations have so much. They have a stranglehold over these councillors, and these councillors they're going to vote it down, stall it. Kick the can down the road. Nothing's going to get built.
Yeah, no, that's a great point. So is the idea here to provide incentive to the municipalities to get through, like get these permits through and deal with the NIMBYs and everything else. So help me understand, help the audience understand what this money is going to be used for at the municipal level.
So they want to help cities speed up the delivery process. So improve technology, improve the inspection processes, eliminate the manual paperwork that's involved in setting up appointments. Let's automate this stuff. Let's give inspectors, tools, iPads to know where they could go from property to property to do their inspections, pass it to the next phase, keep the process going instead of people just waiting and contractors waiting for the inspector to show up to pass, so that way they can now drywall because they have to inspect plumbing and electrical before the drywall goes in. Like everything stops, everything gets delayed, everything gets stuck at different stages, and that house isn't prepared, that unit isn't ready quick enough. So this Accelerator fund, as it's designed to do, is to speed up this process, because the time from approval to completion is just way too long. And we need homes now, not in 3 years.
No, that's true. That's true. But it doesn't also address the biggest hurdle, which you have mentioned a few times, is not in my backyard. So what solution is there for that?
As we've talked about this issue for the last few years, I think there's a tremendous opportunity to look at what is driving demand. And I want to just shift gears here for a minute. I want to go into the foreign student, international student issue. So in the last 10 years, international students in Canada have gone up 135%. So right now, we have 621,000 international students in Canada at the end of 2021. 47% of those are in Ontario. So close to 300,000 of these students are in Ontario, and they're primarily in GTA. There's no doubt about that. These international students, they've introduced this ban on foreign ownership. But it excludes international students. So we're seeing international students come over here with $1 million buying property. We had one case out in BC. They bought a $14 million property. So they're the owner, but they don't have $14 million. Their parents do.
Their parents do.
So it's a bit of a joke. It's really, why are they exempt? But here's a solution. Why doesn't the government basically go to the universities and say, hey, we're going to give you some money. We want you to build housing units on your campuses. You have a lot of land. A lot of these universities have a tremendous amount of land. Build on your campus the amount of units that can accommodate the foreign students that you admit to your university, and house them for the 4 years or for the full term that they're enrolled at your school. So that way they're not into the residential housing stock, which drives up prices, because landlords and investors love foreign students because they're nomadic. They're in and out in a year. Guess what? I could reset my rents. Right? I don't have a 10-year tenant where I can only jam up my rent 1 or 2% as per the the tenant landlord code, right? The tribunal sets that. So why isn't there a solution to get rid of the bottleneck? And I think that's where the opportunity presents itself. And I think that's where the government doesn't know what they're doing. Now, granted, 60% of these foreign students do apply for permanent residency in Canada. So it's part of that immigration number that does get bandied about, the 400,000 that come into Canada. That includes students that get their permanent residency.
Right on.
So, I don't know, you finish school, you go buy your house.
Certainly. And you brought this up before on my show and elsewhere, I guess, and it's a great point about the universities. To build student-specific housing, let them go there, and then free up rental stock for everybody else. I think that's an excellent idea. So I don't know why that's not entertained, maybe didn't land on the right desk or something. I don't know.
Well, I think it really is a matter of these people that are making decisions don't understand the marketplace.
Mm.
We have an aging skilled worker issue.
Okay.
I think over the next, I think by 2030,
Yeah.
50 or 60% of skilled trades will be retiring.
Wow.
And these are trades that are effective, efficient, and could get their job done quickly because they know every trick of the trade, every shortcut, how to do things properly.
Yeah.
I've talked to general contractors and developers who say the new breed of trades works at about 60% capacity of an experienced tradesperson. So that prolongs the process.
Mm.
Right. And, the budget talks about a lot of green initiatives, net zero emission homes. That stuff costs money. How can the green movement and affordability be in the same sentence? Anything that's green related costs almost 2-3 times the price. So how can you get affordable housing?
Yeah, no, great points. All great points. I want to go back to the foreign buyers thing for a second. I'm going to bring that back up on screen. So about halfway down the list, a ban on foreign investment in Canadian housing. Okay, so the last time they did that in BC, I think it was 2015 or 2016 or something. As soon as they announced it, there was a 15% tax on foreign ownership, and then the market tanked, for lack of a better word. I think it went down about 15-20%. They tried this in Ontario in 2017, if you recall, in April. Same thing. Not that the tax itself had a big effect, but I think it was just the anticipation that it would. And a lot of buyers sat on the fence. So if you remember the spring and summer of 2017, things slowed down significantly. I don't remember the exact percentage, but it slowed down. And then prices fell. And since then, they've been on the rise going up. So do you think the same thing is going to happen here as soon as people see, oh, they're going to ban foreign ownership, prices are going to fall, buyers are going to take a back seat? What are your thoughts about that?
Well, the government has done a really good job of vilifying the boogeyman being a foreign buyer, right? So they've led people to believe that this is the issue, and that's what they've addressed.
Yeah.
And, there's going to be a perception that, there's a group of people no longer in the market, and the market might, take a little correction short term.
Mm.
The reality is we still have a lot of people that need homes.
Yeah.
And there's not enough quality homes available.
Yeah.
But I'm at the point where I'm convinced I don't think the government cares about these runaway home prices. And I think there is a correlation to a pension gap. We have a growing an aging demographic.
Okay.
We are going to have a pension deficit in the next 10, 15 years. Mm-hmm. Like, my dad's 88. He's going to be 89 this month. And, I know what his pension is. Thank God he's got, a private pension as well. But on CPP and old age, it's not much. Mm-hmm. And it's surprising to think that people that are just living off of that can survive. So we're seeing the reverse mortgage trend become more and more in media. We're seeing that being part of the conversation. We're seeing people tap into the equity in their homes, because I really believe the government or somebody thinks that, they're going to need something to live off of.
Yeah.
So that's their retirement fund.
Yeah.
And I think they don't care. I really don't care. Like, if the foreign ban, it's 2 years. There's a lot of loopholes. Yeah. I don't think it's going to make that much of a difference.
No, I agree.
The 20% non-resident tax, you could get rebated if you apply for permanent residency within 4 years.
Right.
So it's kind of like a holding fee, a deposit.
Exactly.
Right? So people are getting that back. It's not a penalty. And this is where we really have to drill down into the details and understand what is actually happening. Like, this is just a lot of nothing. What I do like in the budget, I like the tax on assignments.
Okay.
I think that is a problem.
Okay.
So, it's kind of buried in the little details, but there are a lot of people that buy condos for the sake of flipping them.
That's true. Yes.
So you eliminate that. You're either going to rent it out, put it on the market as, a startup landlord, or you want to be a small-time investor and you're going to rent them out, or you're going to close on it and live in it.
Yeah.
If you have to pay HST on the assignment sale, that pretty much negates any opportunity you have of making money.
Yeah, I agree. So that was another one of these things that might cause buyers to take a back seat. So, I mean, this one, the foreign buyers thing, property flippers, they want to target them, charge them business income tax, not capital gains or anything like that, on selling within a year. And so there's a number of things here that could potentially, in my opinion, bring the market down a little bit. But let's shift gears here a little bit, because you've actually said the market has already peaked. You've been on record saying that.
I think it's peaked in February.
Yeah. And I actually have to agree with you, because I posted the same thing, that the numbers are kind of hit their peak and they're kind of coming down. In some cases, Toronto and Brampton, I believe, prices have come down month to month. Now it's only 1 month, granted, but this could be the start of a trend. Other areas have gone up. Mississauga and Oakville, I believe, have gone up. So there's a bit of a shift there going on. A lot more supply versus demand coming to the market. I don't remember the exact numbers, but I know in the West GTA area, it was about 54% additional supply versus 24% additional sales. So market has already peaked. What do you anticipate is going to happen going forward, spring and summer?
Well, I've talked a lot about this, and I've had a discussion this morning with a couple of people that popped in here and wanted my take on the federal budget. But I think there's going to be a flood of listings, and not for the reasons that a lot of people think that they're doing. COVID paused a lot of people from selling, and I want to talk about the segment of the aging population. These are people that would sell their homes and go into retirement facilities.
Correct.
So, during COVID, people were scared shitless to go into a retirement home. Like, people were dying. So why am I going into a death zone? So I'm going to keep my house, and values are going up. So why sell it? The family's saying, you know what, let's keep mom or dad's home, or mom and dad's home. And we'll ride this out. It's going up. Why sell it now? So now that things have peaked a little bit, there could be this flurry of properties going on the market for the reasons that traditionally they would go on the market.
Correct.
People are downsizing. People are moving into assisted living facilities, retirement homes, and using the equity to sustain themselves during that period of their life. We never had that for 2.5 years. And I think you're going to see a flood of listings from that segment that are going to be misconstrued as people dumping. Right? Because it's more difficult now to refinance those at these rates and keep it.
That's right.
So, because usually, there's a few siblings, they have different ideas. I'd rather cash out on mom and dad's home. I want to keep it. Refinancing it now doesn't make as much sense, because carrying 2 properties is a little bit more difficult, tougher to qualify. Got to get into alternative lending opportunities, which drives the cost to carry a little bit higher. So I think you're going to see some of that behavioral situation take place, and people are going to misunderstand it. I think that gives an opportunity to first-time buyers to get into those homes, because they're outdated. They're an entry-level home. You're not paying for the premium of, the modern look and feel and stuff like that. And I think it could help some of these first-time buyers get into the market.
But wouldn't a downsizer have a larger home? If they're an empty nester, they would probably have a larger home. It may not be suitable for first-time home buyers, but it could add to the change.
All depends. All depends, right? Like, that's basically we're going to assume everybody's well off and no one's got a wartime home that they've lived in all their lives, because some of these seniors aren't as mobile as our generation of moving every few years, right? Some of them are probably in the same home in Leaside or in Etobicoke, and
that's right.
They've been there for 30, 40 years. So I don't, like, I'm sure there's going to be parts of that group that will have bigger homes.
Okay.
But it's an opportunity because it provides more listings, more choice, more balanced markets.
Yeah.
And all of a sudden, as a buyer agent, you could go in there with some conditions and not have to hold your breath and hope you get it.
Yeah, exactly. No, that's an excellent point. Speaking of conditions, however, I wanted to ask you before I forget, are you seeing more applications come in with a finance condition?
Yes.
You are? Okay.
Yeah, it's becoming a little bit more apparent, which is nice because the anxiety level subsides a bit.
Okay.
When people are going in firm in a bidding war, not only do you have to worry about the financing, you also got to worry about the appraisal.
Yeah.
And in this market, I'm telling everybody, get the appraisal done right away. Don't wait 30, 40, 60 days. If this market's dropping, you don't want to be caught.
Ooh, okay.
Right. So as soon as you buy and you waive, let's get the appraisal done.
So what are you seeing now with appraisals? Are they still coming in lower than the purchase price or higher?
We're starting to see some challenges.
Okay.
If there's activity to support the value, great. If you're buying at the top of the market, you may be. If you just set a new benchmark in your neighborhood, now's not the time to do it.
Right on.
Because your appraisal will not be able to be supported, and you might have to come up with a shortfall. So if you're in that tight 20% down payment, you don't have a lot of wiggle room, you could be out of luck. If you got 30, 40% down, it's not a big deal, right? Because you're still going to get your financing.
Okay. I also want to ask you about interest rates, because I think you mentioned that we're expecting it to go up by 0.5%, right? So it's already at 0.5 now. So you anticipate it going to 1% then, the overnight rate next week?
Not only do I think it's going to go to 1%, I think on June 1st it'll go up another 0.5 point to 1.5%.
Okay.
And I caution people not to panic. If you were in a good variable at prime minus 110, 120, prime minus 1 for that matter, in 6 weeks, 7 weeks, you're probably going to be at 370 minus 1. You're still at 270 as opposed to a fixed rate at around 4%. So you're still better off in a variable. The new variables aren't as priced aggressively, but they still give you options and they give you time. I don't think the Ukrainian war is going to last 5 years. So why lock into a 5-year term? This war will be settled at some point. I think it'll come to an end, and then it'll take 6 to 9 months to recover from the aftermath of the economic fallout. Ukraine's missing their planting season for wheat this week. You miss that planting cycle, you don't have another one, right? So you're going to lose almost a year.
Wow.
They represent 10% of the global wheat production. Wow. Russia represents another 18, 19%. So, with the sanctions against them, that's almost 30% of all wheat exports globally.
Wow.
So we're seeing those prices of food go up.
Yeah.
We're seeing fuel go up. The percentage of disposable income going to food and fuels at its highest point in 40 years. I think it's at about 11, 12, 13% and growing.
Okay.
That's the bigger issue than interest costs. Okay. People eat every day. People gas up every week. And they're seeing that extra $40, $50, $60 in costs throughout their week and multiple times throughout the month, as opposed to an interest payment. And I always tell people, you've been qualified at 5.25. That's a qualifying rate. So when we do our job, we really make sure we spend a lot of time having our clients understand exactly how they got qualified and how much wiggle room they have, and not to worry about it.
Yeah, no, I get a fair point about the stress test and the qualifying rate. But in your opinion, are interest rates rising too quickly? Because now we just went up 0.5%. We're going to go up another 1%, and then another 0.5%. So is that dangerous when they go up in a matter of a few months? They've jumped or will jump 1.25%.
Well, it's necessary to battle inflation.
No, I get that.
Inflation's a big issue. I don't think it's a big deal.
No.
And maybe because I'm in the business and we saw interest rates at a record level. Like they were rock bottom. And it was, you got inflation kicking in at 3.5%, 4%, and you're paying 1.5%.
Okay.
Like, why wouldn't you buy a house? Like you're already in the positive as soon as you buy it.
Yeah.
Like your cost to borrow is 1.5%. It's going up 3-4%. You're making money just taking part in the transaction.
Right on.
So we have to have higher rates. I think there was a lot of money in the market in people's bank accounts with the stimulus dollars that the government issued out. It created that inflation too, right? So I'm not too concerned about it. I think relatively speaking, we're still at very low rates. It's now a qualifying issue because prices are at a record level and people just can't get into a property at a reasonable price point. And that's why I think the federal budget missed an opportunity. I think if there was something, if it was up to me, I would offer tax deductibility on mortgage interest up to maybe $400,000. If you really want to help a first-time buyer, do something that already exists. In the U.S., they have tax deductibility.
But they also charge capital gains when you sell it, though.
They do, but we have that advantage. So what something like this could do is say, okay, you want to be a first-time buyer? On the first $400,000, we're going to make your interest tax deductible. So at 4%, we're talking $16,000. Okay.
Yeah.
So consider like a half of an RSP contribution every year.
Okay.
But it's only on that home. Keeps people planted in their community. Yeah. It keeps their costs down. And then you start letting them know, hey, if you refinance, you're shit out of luck. It's on that first mortgage. On that first home.
Yeah. Okay.
First time buyers. I want to help you get in the market, but I don't want you speculating. I don't want you moving up. This is your starter home. It's to get you where you wanted to be a homeowner. But the minute you move, you don't got it anymore.
I think that's excellent. That would make a bigger difference than the current tax rebate of $750 going up to $1,500.
What's a rebate? A rebate's nothing.
Exactly. Wow. No, that's great. So one thing, since we're going back to the budget, that's missing from the budget that there was some talk about was they were going to restrict, I guess, the down payment and where it comes from. They didn't want to use borrowed funds or something. Did you hear any rumors about that? And
they did not include that. I spent this morning going through
the for sure.
So the whole housing file.
Yeah, that's why I said it's missing from there. I'm glad it's missing from there because I think that could have really thrown the market into a tailspin because a lot of people have been tapping into their home equity, as you mentioned a few minutes ago, buying a second house. But now with interest rates going up, that's going to be less feasible for people. So is that why they didn't touch that, you think? Or was there?
Well, I don't think it's a real issue. Because the stress test and the qualifying rate now makes it, and rates rising makes it a little bit more difficult. But one thing I will say is I'm disappointed that they did not keep their election promise of reducing the CMHC fees by 25%. People who use high ratio insurance are primarily first-time buyers. Okay. Yeah. As much as that first-time home buyer account is nice.
Yeah.
How about the ones that are buying houses that need a break? These premiums are excessive. There's no delinquency. Right. The insurance is there to cover the lender from default.
That's true.
That insurance is not there to protect the homeowner. It's there to protect the lender, to allow them to lend beyond the 80% level. So why not give them a break? Because that premium is a default premium.
Because that wouldn't,
And that was a promise made in the election that they were going to reduce that by 25%.
Wow.
They didn't do that.
Interesting.
Right? So that was disappointing.
Do you think the banks were against that? That's why they didn't want to touch that.
Well, the banks only benefit from it because the insurance is the insurance.
Okay.
It's the premiums charged by the insurers that are assessed by the government. All the insurers have to use the same premiums. So there's no differentiator between the three insurers in Canada.
No, fair enough. Fair enough.
So that 4% premium or whatever it is, I don't do many.
But with that 1 million cutoff, and now the average price of homes going over 1 million, now the banks have to pay out of pocket for their premium, right? Because it's not trickled down to the consumer anymore. Correct. Or is it like?
Well, I don't know if they're even able to insure off the books anymore. I think they have to be an insurable loan. They do pay for those, and it's already built into the rate. A non-insured mortgage is more expensive than an insured mortgage because of that premium that you're talking about. So
fair enough. Yeah,
they already got that covered. It's built into the fee.
Okay.
But Lambros, it's an interesting time because we are missing the boat on a lot of things.
Yeah.
And it's unfortunate because there's a tremendous opportunity to help people do something that matters. And this whole budget kind of fell on its face, did nothing. Big nothing burger.
Yeah, exactly. Yeah.
It sounded great though. Had all the adjectives like Accelerator Fund, we're launching programs.
That's right.
Advising cities, leverage transit, rapid building. Nothing's moving.
No, nothing's moving. You're right. They're revisiting the blind bidding thing again. So I'm going to bring that up one more time because I do want to talk about that. Moving forward on a home buyer's bill of rights. So that, again, that's some fancy words to say they want to eliminate blind bidding. But again, that's provincial jurisdiction. They have to work with other governments. I don't know how that's going to work. And I'm not sold that that's going to be the answer, because as soon as they open it up, the person with the deepest pockets or the buyer with the deepest pockets is going to win the day anyway. So wouldn't that just encourage prices to continue going higher? Right.
It doesn't solve the problem.
No, it doesn't.
As a matter of fact, you're dead on, right? Like, okay, now I know what the highest bid is. If I really want it, I'm going to overpay.
That's right. Yeah.
So how does that keep rate values down? So now
I don't know.
Somebody's overpaid. They've set a benchmark in that community, and every other house just went up.
Exactly.
Because appraisals are done in the comparative analysis.
You're right.
So if the market's at 1.2 million, there's not enough of them, and the guy comes out and says, well, there's 18 people that want to live in the community, and one guy wants to pay 1.5, guess what? The benchmark's now 1.5.
Well, that's right. Exactly. It always sets the floor for the housing price.
And this is what I don't understand. Like, where is this coming from? This is somebody who's upset that they lost on bidding wars because they're cheap. And I may offend some people. Okay, they don't want to listen. In this market, you got to overpay. If you want the house, you have to overpay.
I think that's part of it, because there was a lot of talk. Buyers were complaining. Maybe they were, and the politicians were listening to their constituents saying, "Oh, I lost out on bidding wars. I lost out on bidding wars. This and that." So maybe that's what's fueling it. I don't know.
But Lambros, what's the root problem?
Yeah,
the root problem is there's 20 people that want one house. There's one house available, and there's 19 other people that didn't get it.
That's right.
We have a supply problem.
Yeah. No, exactly. Like you keep saying.
So, I always find it funny when politicians, it's an unintended consequence of the real problem.
No, that's true.
And they just don't know how to deal with it. So they say, okay, we'll come up with another law. We're going to come up with this. We're going to come up with
another
that.
tax, another law, which really doesn't
solve the problem.
Yeah, so that's great. Yeah, and you had some great ideas, some great solutions. So maybe you should run for office.
You know what? I've had so many people suggest that, like, there's no way I would do that job. I had an opportunity to meet with the housing minister for a coffee, and we spent 20 minutes together. And he was really on this investor slant.
Correct. Yes.
And I don't know if I mentioned this to you, but
that's what's missing from the budget as well. They didn't touch that.
Right. So they made, there's this big rigmarole, and he talked about, we got to stop the investors. I said, well, hold on a minute.
Yeah.
Do you really think they're investors?
Mm-hmm.
And he goes, well, what do you mean? I said, I'm in the weeds. I do this for a living every day. And the amount of parents that have to co-sign on kids' mortgages because of the stress test and because of the affordability issue has gone through the roof. So now, when your stats people that are doing their analysis sees that there's people that own multiple properties, when they go in the land registry, why don't they look at the ages of those owners of the property? Because if you could see a 25 or 30-year age gap of the owners of those properties, of people that have multiple properties, because if I'm helping my kid buy a house, I'm now going to own two of them because I'm going on as a 1% owner.
Yeah.
Right. But because I'm on the debt, but I'm only going to be the beneficial owner. I'm helping them with the debt, not the actual ownership. I don't want ownership of his house because then I got a taxable gain if he sells it.
That's right.
So why don't you look at the land registry and see if they're really investors or just parents helping kids out? And this is the problem. They have the wrong data. And he looked at me and he goes, that makes a lot of sense. I said, but you're making decisions based on statisticians and analysts telling you one thing when really something else is happening. Because there's a lot of parents saying, I better help my kid buy now because in 10 years, they're not going to be able to afford anything.
Yeah.
And that's a real issue. And they're making policy to prevent that.
Yeah. Or try to anyways. I mean, I think he listened to you because that wasn't in the budget either, right?
Well, I don't know if he listened to me, who am I? But this is the problem. They're not in the weeds, and they got the wrong people at the
exactly table. Like you said, offline earlier, they're know-it-alls or jack of all trades but masters of none kind of thing.
Right? But it's been an interesting week leading up to the budget. I thought there'd be a few nuggets in there that we could chew on, but the real issue is going to be how do you build the stuff? How do you get municipalities, the provinces on board? And that's the real rub. You can't control the municipalities until you change that system. And I think the task force that the premier put out last month or 2 months ago has some real teeth in there. And I encourage anybody to read it because you'll get a real flavor for the issues that are plaguing this province and why progress is stuck in the mud and nothing's moving.
Yeah. Cool. We can talk about that maybe on another show.
Yeah. I'd love to.
Awesome. That's great. So coming up on 40 minutes here, Vince.
Already?
Yeah, I know. Time flies when you're having fun. I know I pulled you away from the golf, but
no, it's okay. It's all right. Tiger's not teeing out for a while, so I'm an old soul looking for the great story this weekend.
Nice. That's great. Are those photos of a golf course in the background there?
Yes, they're photos of my my club that I'm a proud member of, St. George's in Etobicoke.
Nice.
And we're going to be hosting the RBC Canadian Open this year. So after 2 years of cancellations, we finally get to host it, and I'm really looking forward to that. It'll be a lot of fun to watch these pros tear it up.
Yeah, that sounds like a lot of fun. Awesome. Yeah. That's great. Well, thanks as always, Vince. It was great.
A pleasure. Right. Always a pleasure. Love to come on, and I really thank you for the invite. It's always a lot of fun.
My pleasure as well. And thanks to everyone for watching. Have a fantastic weekend, everybody.
Take care.
Bye.